Wall Street is extremely bullish on Chewy right now. In fact, we just saw BlackRock and some other large and asset managers buy more of the stocks. So we saw BlackRock increase their holdings by roughly 1%, and we saw Wellington increase their holdings by 10%. So, you know, the largest asset managers in the world are buying more of the stock, which is definitely a positive for Chewy. It's good to see that BlackRock kind of hasn't thrown in the towel on the stock yet. Obviously, they're a passive indexer. But with that being said, let's take a look at some of the Wall Street analyst ratings as well. Also worth noting that Vanguard bought 10% more of this stock. So definitely positives to be had within the shareholder list. But with that being said, let's take a look at some of the Wall Street. By the way, is I will go through everything you need to know, fundamentals, and then at the end of the video, I will give a price prediction based on technical analysis, and I'll cover short interest in a second here. But with that being said, we can see that there are 15 bullish Wall Street analysts on throughout Wall Street, throughout the investing community. And there are only two bearish Wall Street firms. So that tells you that generally Wall Street, there's a general consensus that this stock is a buy, right? So it's really good to see that there is a ton of support from the Wall Street community about Chewy. And then with that being said, let's take a look at some of the short interest numbers for this stock. So we can see here that 17% of the float is sold short. So almost a fifth of this stock is sold short. And then we can see that they're really this stock is really in the top 25% of stocks in terms of most likely to have a short squeeze, according to Fintel. So Fintel, kind of signaling that a short squeeze is somewhat likely with the stock. Obviously, though, there are 2.7 million shares available to be shorted, so not all metrics here are signaling a short squeeze for Chewy, but it is definitely interesting to see that the short interest as a percent of float is 17% of the stock. That's definitely nothing to sneeze at. And then with that being said, let's talk a little bit fundamentally about Chewy. So Chewy will continue to benefit from the secular upward trend in the large pet health market. And one thing I also like about this stock is pet health. People are still always going to be buying their dog food for their pets, regardless of the economic situation we are in, right? So this isn't considered discretionary spending, right? People are always going to be feeding their pets regardless of the current economic situation. And then the 14% increase in sales that Chewy reported from Q2 of 2023 was better than the upper end of 2.75 billion to 2.77 billion range that management had predicted. However, the number of active customers fell by 5,000 last quarter, continuing the weakness seen for the past 6 quarters. While the number of active customers was weak, the net sales per active customer performance was very strong, growing to above $500 and remaining well above pre-COVID levels. This was the major growth driver for the overall sales growth. Also, auto ship customer sales performed very strongly, growing at 18% year over year, driving sales to $2,100. So, growth in net sales per active customer and auto ship customers continue to rise. As management mentioned, they will continue to see shifts in customer spending as customers aggregate behavior around trusted platforms, with Chewy having an advantage because they're actually the most visited pet food site. Importantly, the growth ahead should be accompanied by better unit economics as auto ship sales become a larger percent of total revenue. Note that auto ship customers have a higher customer lifetime value as they are recurring nature and lower customer acquisition costs, right? It's always easier to keep a customer than go out and get a new one. I expect the sales to continue sustaining at current low to mid teens levels as I expect active customers to return to growth as it laps pandemic related headwinds and the current macroeconomic situation. I would also remind viewers here that a bunch of active customers are going to mature, which means higher spend per customer as they were added during the COVID period. Comparing the net loss and the net gain, it is apparent that a bulk of these net gains during the COVID period are still used to grow its private label and healthcare divisions, which generate higher profit margins. I believe there is a good chance of consistent margin expansion over the next couple years. And with that being said, let's take a look at the financials for this company. So here we can see that the PE is 61 times for this company. So that means that every dollar this company makes, investors are willing to spend $61. So that's definitely a pretty high multiple. The multiple for the S&P 500 is around 23 times. So we're nearly triple the S&P 500 multiple, meaning investors are willing to pay triple the amount per dollar earned for Chewy than they are for the broader market for the S&P 500. And we could also see that on a price to sales basis, this company's trading at a discount relative to its own history. So price to sales is 0.69, which is below Chewy's 5-year average of 2.88. So definitely signaling that the company's trading at a discount relative to its price to sales history. And then revenue growth for the past 12 months has been 14%. And then for the next 12 months is projected to be 11%. So yes, we are below Chewy's 5-year average of 38% annual revenue growth, but we're still pretty high, and we're actually above the sector median of 6.6. So not too shabby in terms of growth. And then for gross profit margin, we see that we have a gross profit margin of 28%. For those that don't know, this is just revenue minus cost of goods sold. Tells you what a company makes for what it sells. So this 28% number is actually pretty solid and is better than the company's 5-year average of 24%. So this signals to me that this company is improving on its profitability metrics, which will definitely be a positive for Chewy. And then we can see here that the company has $1 in cash on hand. So they have roughly $1 in cash per share, which is a little over 5% of the market cap in cash per share. And then with that being said, let's take a quick peek at this company's balance sheet and see if they have a healthy looking balance sheet. So this company has $905 million in cash per share. They have $517 million in debt. So they have actually $388 million more cash than they do debt, as they have $905 million in cash per share. Or actually, not per share, in total cash, obviously. So great to see that this company has more cash than they do debt. They're definitely set up from a fiscal standpoint to really invest in growth over the coming years, which will definitely bode well for this company in the long term. And let's take a look at the chart here and give a price prediction for the stock. So I'm going to give a short-term price prediction. Long-term, I think the company could head well above this level, but just going to give a short-term price prediction based on technical analysis. So right now, shares are rebounding from oversold levels. And we really see the next major level of resistance at around $22.30. So I believe we could come up to this $22.30 level pretty quickly here, as this is where shares had bottomed in May of 2022. It's also where shares had bottomed in December and in March of 2022. So I believe this past level of support acts as new resistance for this stock, and we see a move up to $22.30 over the coming weeks. Could see some consolidation around that level. And then in terms of seasonality, we can see that October is actually the best month in the stock's history. So on average, shares rise 13.5% roughly in the month of October, which is the best month in the stock's history. So seasonality wise, Chewy typically does pretty well in October. So you add it all up, I would really want to see this company improve on its PE before I put any long-term money in. Really just made this video to kind of break down things and just give a current state of this company. So personally, I'm going to wait until they improve on their profitability metrics, they improve on their valuation before I put any long-term money in. But if you're already an investor and you're super interested in the pet health space, this is definitely the name to own within the pet health space. So, kind of bullish the general sector. Like I said, waiting to put long-term money in until I see some profitability metrics and some valuation metrics improve. But with that being said, if you're extremely bullish on the pet health space, this is definitely the stock to own. So with that being said, I hope you enjoyed this video. I will end it there. Looking to learn more about the financial markets? Well, I just released a new course that will teach you everything you need to know about the stock market. You can find that at happyinvestingtoday.com. Also on the site, you can purchase one-on-one coaching sessions where I will break down your portfolio, and to better assist traders when searching for setups, I'm selling trading bots, which will tell you how your trading strategy has performed historically on a stock, crypto, or currency that you are researching. If you would also like to see what me and my experienced trading team are doing on a day-to-day basis, join our Discord, which is linked below, for a free 7-day trial. With that being said, please leave a like and subscribe. Appreciate you watching this video.